In the alternate version of exercise 610, we're continuing forward with our bank reconciliation from exercise 6.9. So we still got that bank rec from Delgado, but we're preparing now the adjusting entries that result from that bank reconciliation. And I'm going to step through one by one through the additional detail that we were provided to determine which items do and don't need adjusting entries and what those resulting entries are. So again, here's our bank reconciliation from exercise 6.9. One of the additional details we provided was that the outstanding checks as of June 30th totaled $1,620. And if you recall, we correctly showed that on the bank side as a deduction to the bank balance of $1,620. So what does a journal entry need to be? Let's start to set this up with the first item. No entry required. Keep in mind that this is an adjustment to the bank side. We're assuming that since we don't have an adjustment here on our book side, whatever these checks are, we've already correctly credited cash within our $12,398 balance and debited whatever asset and expense accounts were necessary to debit. So it's already recorded, so no adjusting entry is required. A big hint, anything here on the bank side, already assumption is that it's been recorded on the book side, so no adjusting entries. Let's move on to our second item of detail where we indicated that the June 30th bank statement included a $35 debit memorandum of bank services. If you recall, we showed that as a deduction on our book side of $35. Anything that we record on our book side is something we didn't previously either debit or credit cash, and whatever the flip side of the entry happens to be. So now we do need to record an adjusting entry for any adjustments on our book side. So let's think through our entry here. It's an additional service charge, some type of an expense to the business. We usually debit an expense account. So not given any more detail, we'll debit an account like miscellaneous expense. We're increasing the expense, so we'll debit it for $35. The other side of this is we're deducting cash. From Delgado's perspective, cash is an asset. We deduct cash by crediting cash also for the $35. Once that's recorded, we're going to lower our book balance and get it a little bit closer to what the true balance should be. Let's look at our next item that we looked at before. Check 919 listed with the canceled checks. The bank correctly removed $789 from our account, so that's already correctly recorded up here, and it was a payment for a utility. But Delgado made a little mistake, and that happens sometimes, is that they incorrectly recorded it on their books for $798. So a little bit more. In fact, $9 extra. So they debited utilities expense and credited cash for $798 when they should have debited and credited both accounts for $789. Again, we showed it as an addition on our book balance. Anything on our book side that we either add or deduct, we've got to make an adjusting entry related to that. Now, this one may seem a little bit tricky because when we first issued it, we debited utilities expense and credited cash, but we did it for too much. So now we're going to have to partially reverse this entry. Before we credited cash, now we're going to debit cash because we took too much out of it and add $9 back. On the other side, we increased utilities expense too much, or we debited it by $9 too much. So now we're going to credit utilities expense for $9. Bringing now, with both of these entries of the bank service charge and the error, now finally that would bring our actual cash balance on our books to $12,372, the true amount of cash we really have, and that's what we want. Last item that was noted was that there were $2,471 in deposits in transit. So Delgado had already recorded it in his books as a debit to cash, but it was put in the night depository and the bank just didn't have a chance to process it as of the end of the day, June 30th. So while it's an adjustment we need to make to the bank side, there's no entry required. Again, anything on the bank side, no adjusting entry. we've already recorded it on our book side, but any additions or deductions on the book side, we do have to make an adjusting entry. With this exercise, I just went through two simple adjusting entries. Keep in mind, you might be expected to make adjusting entries for interest income or NSF checks or collections of notes receivable. So make sure you thoroughly read through the different examples within the books. We just went through a simple example in this exercise, just as a simple representation.